All right, traders, good evening to everybody. 2 minutes after 6 at the moment. Ashley here, and it's good to be with you. We're going to get started here with this evening session. Just our disclaimer here on the information we'll be discussing, guys. It is opinion. Let's not construe this as advice in any way. A warm welcome if you're here for the very first time, or you'll be checking it out a little bit later on. A warm welcome to you guys. It's Friday, it's the 21st of August, and there's obviously a lot of guys that have already gone, away. They've put up their suits, hung them up, and they are obviously with families and so forth. So we're going to do a quick review as to what, we're seeing, and then obviously we'll chat just a little bit about, perhaps next week, looking at some of those setups that could come through. And then we'll hang up our suits here for the week, and then obviously commence again next week. So a warm welcome to you. Thanks for tuning in. If you are here, let's get started. We're going to kick it off with the oil price and maybe just chat a little bit about the oil price quickly, guys, and just make sure we all align there. All right. So starting off with the oil price, guys, we'll look at it from a monthly perspective. We know that the end of August is coming. We're just a couple of days away from it now, a week out. And we can see for the month of August, there has definitely been, some momentum in terms of the oil price for the entire month so far. We had, maybe just 2 or 3 days of support here at the $78 a barrel. And since then, we've been pushing up. So for the month of August, oil has climbed around 18%. Now, this is the daily frame, guys. What you guys must understand is that this is a correction. It's a pullback that is happening from this high over here. We had an impulse, and there was obviously a weakness in the oil price over here, which gave the guys the buy sign to push in. So now we're experiencing a bit of a move to the upside, and you can see from a low to a higher low, we've also now created a high over there. So, what we're going to be looking for is next week, we are basically in between two worlds here. It's either we are pushing down back to this trend line next week, guys, or for the month of August, we're going to be breaking that specific high. So if you're in any oil prices, then obviously you can obviously check that out. But it looks like at this point in time, we're stuck between. We got to see the high there. Dr. Ahmad, I see you there. Good evening to you. I see it. Thank you, my friend. I really appreciate it, man. Listen, I love the kind words. Thank you for reaching out and mentioning that to me. I receive it with a glad heart. Yeah, blessed heart. Thank you very much, my friend. All right. So, guys, the oil price really, let's see how it goes. We must not forget about the correlation at this point in time as it relates to the inflation. Remember, when the oil price pushes to the upside, we have a high inflation number coming through. The dollar does tend to strengthen. That's been happening for the past couple of months. So we do see a stronger dollar pushing up. But at this point in time, guys, let's wait for it. Let's see how the week opens. Do we have the pullback, or are we from a weekly perspective? Don't forget, guys, there has been no pullback recognized yet, all right, on the weekly frame, all right? There's been no pullback. This is the trend line I just drew there. There's no blue zigzag or zig here, which means it's not recognized yet, all right? So price can definitely still come lower, and we can extend there, absolutely, until we have an acknowledged, lower high. Then obviously we are working with what we have for now, and that means that anything can happen next week. We can have the oil price go up. Now, if that obviously happens, we have a stronger oil price. Let's move now to the gold, guys, and we want to try and see what's happening here. Here, the total opposite has happened, guys. All right, I explained to the guys the issue with the buyback bonds that the U.S. government has done. Scott Bessent has mentioned that there's been a double purchase, from an issuing bond perspective. Instead of paying $2 billion, there was a double up of $4 billion paid for all the old bonds, all the old treasury bonds that are not as attractive to investors anymore. All right, so with them wanting to dump those bonds, that has increased the debt significantly, and it has put the dollar in a lot of panic. So the government had to come and issue new bonds so that they can get new money coming in from investors that's more attractive, and then buy back the old bonds, because the interest rates obviously is changing. If you buy a bond, a long-term bond for 30 years, 30-year yield bond, or the 10-year yield bond, there's a fixed interest rate to that. Now, if the oil price continues to go up like we're seeing here, it means that the bond yields on the older ones will not be attractive, because the inflation that goes up forces the yield, the interest rates, to be pushed up as well. So investors that got in maybe 2, 3, 4, 5 years ago, all right, and they're seeing a more attractive bond, or or a higher yield, they're going to want to dump their old ones. And because of that, guys, we're seeing a bit of a choppy dollar coming in. The investors are obviously waiting to see what's happening, and whilst that is going on, the gold price is increasing in strength. Okay, so for the month of August, guys, we can see that gold also just had maybe a day, not even a day and a half, maybe a day and a half of support, and gold has gone up about 14% as well, which is phenomenal, guys. All right. There we go, Doc, man. Thank you for that. Listen, words can't explain the gratitude. Believe me, man. Gratitude is like anti-venom for all the people out there that's not, really seeing what is real. Yeah, Tejedo. Hey, man, I'm here, Tejedo. I'm here, brother. All right, shout out to you, man. Shout out to you. All right, shout out to you. All right. So guys, gold, about 13 to 14% of increase for the month of August. So if we continue to see a weaker dollar, then the weekly frame, all right, is going to be eaten into. Because remember, guys, don't forget, from a weekly perspective, this was a high. That was a low. What gold is doing is creating a lower high here. So we should not forget that. It's creating a lower high. So what's fast tracking this, what is giving the gold some more vuma, is obviously what we're seeing that's happening within the US government, all right? So price is pushing up, and we could be seeing some of this next week as well. The high that I'm going to be gunning for is obviously this area here that is between the ranges, the ranges between 4,800 and 4,700. So I'm going to be watching this very carefully next week. This is going to be a very interesting one over here, guys. Look at that. All right, so that's going to be a very interesting one to see. Let's watch the gold, guys. But again, there's a lower high forming on the higher time frame. So I will not be surprised, ladies and gentlemen, if we do push further up, all right, the dollar continues to weaken. Now, just because the gold price is doing this does not mean that the major or the FX is doing exactly the same. That's very important, all right? That's very, very, very important for us. Oh, I see. Okay, is that CF Mslombe? All right, guys, let's give Shlom a round of applause, man. Okay. Listen, Teiro, do you want the guys to know your surname now, because you took me off there? All right, do you want me to tell the surname now, or should I leave it for another day? All right, let me know. Shlombe, welcome, man. You at the right place. You at the right place. Until I see you there. All right. So guys, let's watch the gold price. Like I said, it doesn't mean the FX is doing the same thing. In fact, we're gonna go to the FX now, and we're gonna go and see what's really cracking over there, because we've been seeing the choppiness. It's only really affected the gold price and the Bitcoin price. I'm talking about the bond buybacks. All right, that has affected the gold price and the Bitcoin price. And if I just go to BTC just to round it off, there's the Bitcoin price, guys. All right, I think it's as fair as it's clear as daylight. I beg your pardon, clear as daylight, that we can clearly see that BTC was affected, gold was affected, but the other currencies seem to be a little bit more stable. So let's go to them. All right. USD Swiss franc, guys. It's unfortunate. I did not want to stay in this trade for the weekend, but I have no choice at this point. I'm going to leave it in. What I'm still anticipating is for the dollar to strengthen against the Swiss franc, because the setup is looking great. There's a lot of buyers here. There's a lot of weakness in the sellers, especially for the mere fact that we've now officially, all right, not only once but twice pushed above that same level of weakness there in this structure. And when I say this structure, I'm referring to this one over here, guys. This one here. So this structure here, this one here, all right, that area. Now, what's important is that is the weakness in this impulse here, right here. We've broken once, we've also broken twice now in the weakness, or through the weakness of that impulse. And that's why I'm going to stay in with the USD Swiss franc. I still see it coming up. The USD Swiss franc also came down because of the bond buyback, just so you do know. All of them were affected because of that, okay? But this correction is what I am, attempting to trade now. It's a good 40, 50, maybe even 70 pips here that's, up for grabs. I'm going to leave it overnight, and then I'm going to see how it performs, on Monday. And then obviously the Euro USD as well. We can see that the area that I had anticipated, and I told you guys, I actually highlighted that white area, and just to show you that this place is a very dangerous place. And I put that on there specifically because I wanted to really show you that every time price came in there was a rejection. So there was 1, there's 2, there's 3, and now the 4th time. So I said to you guys at 3 o'clock, what I'm waiting for, I needed to break past that area. Once price breaks through that specific area, that becomes the more attractive area for the sellers, all right? Because this is the weakness. That's the weak spot of this entire structure. I want you to think of it, guys, as a building, all right? I want you to think of it as a building, all right? when you genuinely, guys, when you genuinely know how to do demolition, just go and Google some of the demolition of buildings and the strategic places where they actually put those bombs, the C4s, whatever bombs they're going to be using there. It's not like the old days where they're just using that massive ball. All right, now they're using bombs and they attaching it to many of the foundational structures. Because when you take out that sweet spot, that weak spot, the entire thing comes down. So I want you to think of it like that. I want you to start thinking skill, from a skill perspective. That becomes a skill. It's no different for all the guys, and I'm going back to boxing, Dr. Ahmad. We have a packed roster from now up until October. A packed roster for a lot of fights, a lot of the lightweight guys. I know that Conor Benn, one of my favorite fighters, actually, Dr. Ahmad, wants to go up to middleweight. Said he's done with 147, wants to go up to middleweight. But the reason for me bringing in the boxers there is because those guys, they look and they study their opponent for sweet spots. They can find that area of weakness, whether it be the chin, whether it be a liver shot, all right? It doesn't matter whether it's against the temple. It all depends where they're going to knock the guy, right? But they look for that sweet spot. And once they know, there's some boxers that I believe they know a little bit more than others. They know how to study the movement of certain opponents, and therefore they can knock them out quicker. I mean, look at Tyson. Tyson's still one of the greatest knockout artists of this time. I'm going to say this time, not only his time, because to knock out someone like 13 seconds in the first round, I mean, think about it, guys. Think about it. 13 seconds, maybe even 10. I could have, I could be misspeaking there as well. It could be 10. All right. And it's exactly the same in this. There is a resistance here and there is a structure here. And once you learn where the sweet spot is, the moment price breaks through, and I'm going to give you the example of the Euro AUD. This was something that I'd mentioned to the guys this morning, not this morning, this afternoon. I'm bringing it up again because I wanted to demonstrate, being a human being and being a real trader, is that I'm referring back to it because I am subconsciously, indirectly letting you know that somewhere my heart is not sore, but I'm disappointed in the fact that I did all the work. I put the setup there. I had my level. I had the weak spot, which was right there, but I didn't get to trade it. You see that, guys? That is real. That is some real stuff. That's what I want to authentically express that to you guys, all right? Not to be a man of steel here and saying, we move on and whatever. The truth of the matter is, guys, all right? When you value and you take pride in your work and what you do, guys, listen to this. When you take pride in your work, all right, you're going to feel it, guys. All right? When you genuinely take pride in your work, when you know that you study, when you know that you really put the time and the effort and the discipline and the work ethic in, you're going to feel it. This is a classic, beautiful move of about 70 pips, guys, 70 points. If you put 10 standard lots on there, you can easily, guys, listen to this. One standard lot, if you times that by 70, think about it. One value, one pip. If you times that and you get the value per pip on a one standard lot using 100,000 units, it's about $10. So you take that $10 and you times it by 70. Now imagine you had 10 standard lots in there times 70. All right? It makes a big difference. It makes a massive difference. So I'm bringing it back to this area because this was also a structure. The moment the sweet spot was taken out, it fell. It fell. Are we together there, guys? Look at that. It fell. So this is what you should be looking for. And it doesn't matter just because it's an hour frame. This can happen on a daily. It can happen on a 3-minute. It can happen on a 10-minute. It doesn't matter. All right? You can trade whatever time frame. There is obviously differences in the time frames because, a commitment, and I spoke to you guys about the committing power, that a 1 minute of volumes in commitment is different from an hour, is different from a day, is different from a month. The types of volumes that's being traded per month versus per day versus per hour versus per minute There is a commitment there that is different. So if you're going to be entering into a 1 minute, you're going to have a different result if you're entering into an hour. That's how it goes. But the principle of commitment, it remains the same. It's just the patience that's different. Yeah. Or the more patience needs to be considered if you are trading shorter time frames, unless there's crazy fundamentals and you're getting a lot of volatility, then obviously your setup can come quickly. So in this specific case, Euro USD, that sweet spot there is being rejected by this, by the sellers every time. Rejected by the buyers every time. Because the sellers want to come down, obviously, guys. I mean, they want to grab, about 57 pips, but the buyers is resisting this, guys. I know a very famous text that says, resist the devil and it will flee. Are we together, guys? So now, in this specific case, if we have to bring it in here, let's be honest. There's resistance here. And there's fleeing happening here. All right? Every time it comes as a resistance, reject. Resistance, reject. Resistance, reject. Resistance, reject. So you can't be selling into a place where you can clearly see that the rejection is heavy. Are we together, guys? You can't be selling into an area where you can see that there's strong resistance there. Are we together, guys? You're going to make a fool of yourself. And number two, you're going to make a fool of your balance, guys. All right? You're going to make a fool of your balance. You don't need to be doing all of that. So from a monthly perspective, because we look at all the trades here, guys. Look at all the trades there. So from a monthly perspective, guys, all right, for August, there was a support, all right? And the euro increased by about 1.7% against the dollar for the month of August. And all we're trying to extract is this small piece here in the month. That's all. 57 pips within the month of August. Skillfully extracting that. But if the politics, if the economics is not coming through for us, there's nothing we can do, guys. So which means, obviously, from a weekly perspective, we got to go higher. Now looks like this lower high could be further up. So now you shift your attention, you adapt. No longer you're looking for the shorts. Now you're looking for, all right, where's the highest probability of price pushing further up? Now you're looking for buys. So that's going to be important for us, guys. That's going to be important for us. Look at the NZD USD. Stalling, man. I mean, we came in here once, yes, made a bit of cash here on the first drop. But after that first drop, we had rejection. And again, it's that fundamentals that came in here was the panic from the US. Now, that may not happen next week, but at this point in time, that's the reality for this week. So let's see how it closes up. Look at the weekly candle here. It's pretty strong. And then coming into, next week, what you do is you can take that weekly candle. And if I was going to quickly show you this, you take that specific weekly candle and you can actually do this at the low. You can drop to an hour and you can start to look at, listen, for the entire week, that was the low of the week. It's Friday, Thursday, Wednesday, Tuesday. Do you guys see that? Monday. So Monday opens. That was the low of the week. That was the high of the week. Do we come back to the midway point of the week, which is there? Or do we come all the way? You see that? So this becomes something that you can actually implement. Now, in this area, I want you to notice NZD USD, there's a resistance here. There's divergence. So there is a high probability that next week, ladies and gentlemen, we could be coming back down to the midway mark of last week. I'm already speaking like we are in next week. So we could be coming down back to this support over here, right there. That is enough pips. That's on one asset. That's about 69 pips. Is everybody tracking with me? I see dog there, Sugary Rum. To be a champ, you have to believe in yourself. Exactly, man. Exactly, guys. All right. So when you're working right now on a Friday evening, you guys could have been anywhere else. You guys could have been anywhere else. You could have gone anywhere else. If you're in Cape Town, you could have gone to the beach. You could have gone to a restaurant. There's this clubbing that is happening. There's braais probably happening. All right, guys. But you guys are here. So the question is, if you are bearing witness that you are here, trying to get insight because you're trying to extract cash from the market for an extra revenue stream, that's enough, as Doc says, that to believe in yourself to do this. You just got to get the skill. So by looking at the NZD-USD, we already gauging what could possibly happen. So always go to the end of the week, look for the high and the low. Then the following week, look, do we maybe come to the midway mark? Because that's normally what happens, guys. It may not come all the way down, depending on what trend it is. But this is a range. Price ranges. And so even if it comes still there, that is enough money on the NZD. Now you go to the GBP as an example. I'm going to do exactly the same here. Watch. I'm going to do exactly the same thing here. I'm going to go to a weekly. All right. And there's the high. Here's the low. Here's the hour. And I want you to look at this. Look at that. So here we have Friday, Thursday, Wednesday, Tuesday, Monday. And we may not come back to Monday and Tuesday and Wednesday. But I want you to think about it, guys. What if we come back to Monday's high? What if next week we just come back to Monday's high? That's it. That's enough pips. From there to there, it's 68 pips. Now think about it, guys. Listen to this. There's two assets already now that you can see there. NZD-USD, 60 pips. All right? GBP-USD, 60 pips. That's already 120 pips you can look forward to starting from Monday. In fact, don't even start Monday. On Sunday evening, get on your charts. Make sure that you look for the weaknesses in the impulse. So if we look for the weaknesses in this impulse, let's go. Let's look for the weaknesses here. There's the 1 hour frame. Now remember, what if we come back till here next week? Okay, so let's see if that is a possible reality. This is the impulse. You see, that's the impulse. All right, this is the impulse, but I'm not looking to come all the way down. I'm looking at Monday's high. So let's see if there's any fault that we see. There we go. Already on the 30-minute, look at this. On the 30-minute here, guys. You guys see that? Lots of weakness here, guys. Look at that. Look at the weakness here. Now, what's important for us is we need to quantify, dig deep into that weakness over here. All right. So there we have already two lows here. Hold on, just two lows. We've already broken beneath the one. Look at that. This is an entire resistance coming down. Look at that. All right. And then the second one is here. So even just between there and there is 35 pips. You see, look at this. That becomes the next area. Look at that. If I take this away, that was Monday's high. That becomes the area. So the moment price, let's say Monday morning, we start pushing down like this. Look at that. This becomes a trade. So we break there. Let's say we correct. That becomes a trade. From here to there is 45 pips. That's extremely important. Bright Lace later. All right, Doc, I see you there. Kula, I see you there. Intel, I feel a bit more calmer Monday. Yeah, exactly. So if you're feeling calmer, that's fantastic, right? Because that's how it's supposed to be. There's supposed to be calmness. So what I want you guys to do is, all right, look at my AUD Swiss franc. They actually reached the area. Look at that. This was a trade of today, 48. I wasn't even checking it, guys. All right. I said to the guys, I'm going to get out somewhere here. Are we together? It reached the zone. Now, this is something that we should be implementing every single day. It's not just, at the end of the week. In the evening, every single evening, Monday evening, Tuesday evening, Wednesday evening, for the day, you can do exactly the same thing. You go to a daily. and you can mark the high and you can mark the low. And then you can drop to your 1 hour and you'll find the range. We break through that range. That's how you start to identify the trend. Are we together here? So as an example, look at this now. Watch here. If I take the daily frame over here, so that's Thursday, right? There's Wednesday. There's Tuesday. And there's Monday. So it's the same. It's the same. So if I go to 1 hour, you can clearly see. Hold on. Where's my line? My line. Can you guys see how it starts showing you that this is actually a downtrend? If you zoom out, look at that. Do you see how it's creating a downtrend? Do you guys see that? Look at that. This is just the lower high. So for the entire week here, Friday, Thursday, do you guys see that? Tuesday, Friday, Thursday, Wednesday, Tuesday, Monday. Can you guys see from that area there how it created the first low? This is just a lower high. So next week, we could be doing something like that. Now, if I go to a 4 hour, look at that. Is everybody tracking with me here, guys? That's very important. Whenever you are identifying all of the areas for the week, for the previous week, you get to see the trend. Sometimes you don't even have to do the whole daily thing. You can just switch to the hourly, all right? And if you switch to the hourly, you can still track it because these period separators is showing you that this was obviously up. Are we together? There we go. Up. And then this low comes and creates a area where we can now find a lower high. So can price stretch up? Yes, absolutely. It can. But at this point in time, we got to wait for it. There is obviously a lot of economics and fundamentals behind it, but market structure is going to be your go-to. This is for all the guys that want to do intraday trading. Now, there's the top-down analysis. If we go from the daily, if we go from the weekly, from the weekly down, you can do it like that as well. There's no issue with that. But it all depends on your style, guys. It all depends on your style. Is everybody clear there, guys? Let's just make sure everybody's with me here, guys. Is everybody clear? Let's quickly see here, guys. So maybe just to conclude here, guys, because I mean, there's not really anything happening at this point. We're gonna monitor it. We're gonna see what's gonna happen. We know that the dollar weakened significantly against gold, against BTC, against silver. We're gonna see how the rest of the weekend goes, or at least the remaining hours of Friday, and then we're going to kick back on Monday, and then see how that goes. All right. But guys, from me to you, man, have a wonderful weekend. Rest well, and we'll see each other on the charts next week again to see how price has continued and developed. All right. Have a fantastic weekend, guys. A fantastic weekend with the family. Yeah. All right. Thank you, Intel. Same to you. Same to you. All right, Edgar. See you, Mantedo. See you, guys. See you in the charts next week, guys. All right. All right, fantastic. Sandile, see you, man. Good to see you. right, man, guys. Doc, Shalom, Bear. All right, Cooler. Ciao, ciao, guys. All good. All right. Ciao, ciao, man. Bye bye.